Hello, everybody. Welcome to You Can Care channel. My name is Tarun. I'm your moderator for today's podcast. Today's podcast, we have a very interesting topic and an interesting guest. It's about how to deal with your financial well-being because of this COVID crisis. So I'm here with Mr. Nirav. Mr. Nirav is head of research and portfolios at FISDM. Warm welcome, Mr. Nirav.
Hi, Tarun.
Hello, Mr. Nirav. So I would like to express about FISDM and really thank the opportunity they provided us for helping out viewers to get an understanding on financial well-being. So about FISDM, FISDM is an award-winning personal finance brand, along with being among India's highest-rated personal finance application on Play Store. It is also the fastest-growing brand. FISDM aims at democratizing wealth management and making high quality wealth management services available to all through its robust yet simple platform. Right from mutual funds to insurance, digital NPS, and digital gold. FISDM is revolutionizing the way India manages personal finances. We appreciate your support, Mr. Nirav. So let's start off with the podcast. I have we've collected a lot of concern regards to today's podcast topic. The first thing to jump into the podcast, the pandemic seems to have not only taken a toll on public health but also public wealth. Every day I receive a news feed about how stock markets have crashed and the lockdown would lead to a major economic losses in India. We're all hearing about
Right.
imminent recession, pay cuts, job losses. While we have faith that we will soon find a cure to this pandemic, where do you think the Indian economy will stand by the time this is all over?
Right, Tarun, I feel that's a very interesting question. That's perhaps on top of almost everyone's mind. So, today, obviously, while all of us are worried about the health and, fingers crossed, we are very hopeful to overcome this pandemic very soon in terms of, you know, recovering in terms of health. The second largest standing question is that about the wealth situation of everyone. And, everyone's wealth is largely correlated with, how the economy does. And obviously, I understand where you're coming from. There are, news wires, etc., all talking about, gloomy things and, gloomy jargons like slowing down GDP, etc., and a lot many things around it. So I'm having a couple of slides, let me just take you through that, to, actually convey what do I feel, where is the economy headed and how are we, dealing with the situation today, the economic situation today. So I'm just going to share my screen. Okay.
All right. Okay.
Yeah. Are you able to see the screen, Arun? Okay. I'm presuming you're able to see the screen. Yeah. Okay. So here's the idea, okay? So right now we are facing a pandemic, okay? So the pandemic, the lockdown, and rising uncertainties. Obviously, it sounds pretty scary. It's like almost like a thriller trilogy. The only difference is that it's no longer fiction. It is real life that we're seeing right now. But there are a couple of silver linings to this entire episode that is there today. And while obviously we all are aware about the statistics around how is the COVID-19 situation evolving in terms of casualties and recoveries, etc., there are a few silver linings to the dark cloud that is looming large over us today. So today is a much better day. Medical science and technology today is perhaps at a level at the highest level ever. Okay, so coming to think of it, today we are well equipped with sufficient medical know-how and technology than we ever were. So that is one good starting point to have faith in, how we are going to be dealing with this pandemic. Next, global collaboration is at peak. Okay. And for once, countries are not fighting against each other. There is no trade war. There is no Cold War. We all are in it together. All countries are together fighting against one common enemy, which is not another country, but this virus. So, the power of, unity is really going to help us right
I
here.
think that it's bringing humanity as a race together. Like, there's everyone is facing it commonly.
Right, absolutely, absolutely. And I feel, this is the kind of unity that can, that has helped mankind overcome major challenges in the past as well, and will continue to be a great asset to us even today. Right? Countries are not holding back, okay, neither on medical supplies nor on money. We are seeing countries supporting their economies by, spending money left, right, and center. For once, they are not holding their hands back. They are not worried about money. They are putting critical healthcare at the top. Okay, countries are not holding back on medical supplies, even in such a critical situation. What is absolutely noteworthy is the way countries are collaborating and helping each other tide over this situation. you know right from India supplying its sharing its stock of hydroxychloroquine with all other requisite countries, to Taiwan shipping face masks to India. The feeling of everyone being it together, one for all for one. We are seeing this happening today in the world. Okay, and which is very critical. If you think about it, this is going to be a key role in helping us overcome this challenge. Global banks are supporting the economies like never before. All right, we just read about the US signing off a $2 trillion budget, okay, to be pumped into the economy. We are hearing our, back home in India, we are hearing our finance ministry and our central bank, intervening at every point in time and ensuring that, there is adequate support given to the economy in terms of additional liquidity, in terms of, relaxations, in terms of, something as simple as offering moratoriums to normal common Indian citizens on their credit card and EMI bills. So that is the grassroots level till which, central banks and, government agencies are working with together. And the best part, guys, today, generally we would have this conversation in a conference room, with a guy standing ahead in front of us with a camera, etc. But look at the beauty of technology. We are kilometers, miles apart, and yet, we are able to have this conversation. This is the very technology that also helps learning and, best practices free flow across global regions. Okay, so this is the very technology that has been an anchor towards transmitting know-how, medical know-how during times of need. Any observation that was made in, perhaps the US is transmitted to doctors in India. Any observations in, solutions observed by doctors in India are transmitted to the doctors in Brazil, at the speed of light, thanks to internet and, global communication. I feel, these are the great things that we should appreciate today, and we should be really confident having all of these on our side. We should be able to tide over the pandemic, sooner than later. Getting back to the mood point, okay, how's the economy going to perform? Obviously, to a great extent, it is going to be damaging to the economy. It would be really foolhardy to say that, oh no, nothing's going to happen to the economy. But I feel the more important question is, how bad is the economy going to get, and how soon will it be able to recover? I feel those are the most pertinent questions. And, while people may have their thesis, I'm just trying to sum up with a few news clippings. Okay, the economy will recover from coronavirus, but it will take patience. Obviously, this came as it hit us in the face. We didn't know when did it come. The economy will be shaken up for a while, but, like every other time in the past as well, we will resurrect. And let me tell you how. Goldman says that the downturn will be a dreadful nightmare to go through, but the recovery is going to be unprecedented. Okay, so I feel a lot many good things are going to happen even during the crisis. I feel we are going to be much more focused on development than growth for a while. We are going to set our shop in order. A lot many systemic fractures are going to be addressed, are going to be dealt with. The short slump phase, that which is very obvious every economy in the world is going to face, I feel we'll be in a position to capitalize on it and use it to our benefit in a much better fashion. And hence, the recovery is said to be unprecedented. So we are really looking forward to the unprecedented recovery than just a small temporary, economic slump. Obviously, while I'm talking global, most of you would have a question, ye to theek hai, but what about India? Right? Global economies will recover, but do you have anything around India? Well, yes. While the UNC had a report around how bad our global economy is going to be affected, developing economies, which includes India and includes India at the top, are expected to be the least affected. Now, this is majorly because of very less dependency on other economies to suffice domestic demands, and at the same time, the ability of these domestic economies to resurrect due to various, good things in their favor. For India, a couple of good things is, we were anyways going through a structural recovery. Liquidity was, really good in the system in the last couple of months pre-coronavirus. The most important thing, we are having perhaps the largest working population, and we will benefit from the demographic dividend that India has. So yes, so India is going to be significantly insulated, and this also means that we are going to recover much faster than the other economies. At least at the very outset, this is what is being seen. Agencies, consultancies like KPMG can attest to the same fact. Economic recovery in India is expected and on track to be faster and smoother than most advanced nations post coronavirus, and this is going to give us a head start. Once we are back on track, once the world is back on track. So, Tarun, this is where I see the economy right now, and this is how I feel we will fare in the next couple of months.
Thank you for the valuable insights, Mr. Nirav. So, do you think that job losses is still a possibility for those who may be able to foresee such an unfortunate event? Do you have any tips to brace them for this coming winter?
Yeah, I love the way you called it winter. Okay, so the interesting bit is, it is a very sensitive topic. Okay, there are a few topics which none of us like to discuss, and those topics include life expectancy and job security. Okay, we know that none of this can be guaranteed. It's a known fact, but let me give it to you straight. Yes, there is a possibility. Okay, there is a possibility. Whenever there is an economic downturn, there is a possibility of job losses and pay cuts. We are seeing the same happening in very sensitive sectors already, like aviation and hospitality. Pay cuts are being rolled out, and layoffs are happening. A simple reason, people aren't able to run their business like before. They're running short of cash. They'll have to conserve cash. They're not just going to lay off employees, but they're going to cut down on every other cost as well. Okay, this is going to be a part and parcel of this economic cycle. But for most of the audience who have lived through 2008, 2009 would agree to the fact that the times are stressful. But once the economy sets into recovery mode, you can always get back into the grind, and in fact at a much better level than what you were before the crisis. The slightly middle-aged friends here would be able to attest to the fact, the ones who were working during the time of 2008 2009 subprime crisis. So let me take it as a fact. Okay, let me take it as a given that there could be a job loss. I want to spend more focus on how do you prepare for it. Okay, like Tarun, you rightly said, there is no merit in wondering and just crossing your fingers whether your job is secured or not. But it is always sensible to be safer than sorry. Yeah. And prepare for it. So again, I've just got a couple of pointers. I feel it helps if I simply share the slide. It becomes really convenient to speak about. So yeah, obviously, losing a job is a dreadful thought. But do you know what's worse? It is presuming that you could never lose your job. See, I have no intention to be sadist, but as I speak, I am also taking note of the same fact for myself and for every other person that I personally know. There is always merit in being safer than sorry and preparing for a situation. Okay, so here's a pretty simplistic, job loss preparation kit. I try to dumb it down and simplify it as much as possible so that it can be helpful while not being really complex for you to do. And I am really hopeful that all the viewers here do not face a situation wherein there's a job loss or a pay cut. I really hope that doesn't happen. But let me assure you, even if you don't lose your job, you'll be glad that you took note of these points. Okay. So these are universal hygienic points which you might have not observed earlier. Yeah. So again, it is not the standard run-of-the-mill kind of a thing. It's not just about creating an emergency fund. I'm not just going to say that you save your money in bank. It's much more and beyond. Most importantly, review your medical insurance situation. Okay. We all know the situation right now is more of a health crisis than an economic one, primarily. Okay, you got to realize that most of us are really dependent on the medical insurance that is offered to us by our employers. So no, that is out of the question. If you are preparing for a job loss, your employer offered medical insurance also goes out of the window right with it. So you need to really ensure that you have a personal, medical insurance coverage that is not given by the employer. So, this really helps you go through the tough phases, wherein there could be a medical illness or ailment. And we know medical expenses are amongst the heaviest, expenses, and it comes out of nowhere. So, it really helps to have a very good medical insurance for people, earning in a bracket of 0 to, let's say 5 lakhs. It is advisable to have a medical insurance coverage of around 3 lakhs ballpark. Anyone earning more can afford more. Have a medical insurance cover of at least 5 lakh. Once with a family, try choosing a family floater policy. Cover your family as well, spouse, dependent children. Obviously, we don't know how much medical insurance is adequate enough. The idea is to, have as much coverage as you can afford to. So that is one important thing. Most people don't think about it. They feel that a job loss is only a loss of cash flow, but it is also a loss of benefits. Another tough thing, like I said, two things no one likes to talk about is job security and life expectancy. I feel now is a great time to review, your life insurance situation. And I'm talking about a term insurance, a pure term insurance, a pure life cover. It's not an investment. It's a pure play insurance product. That product which is having very cheap premiums, no frills. In case of an event, of a loss of life, the amount is paid out to family, straightforward. So the idea for such a policy is it acts as a great tool of income substitution. Those with dependents should try to have a cover which is at least, worth 3x of your annual CTC right now. Look at this as an income substitution. What insurance is basic hygiene. Right now, it is all the more important because life is uncertain, but having an uncertain life amidst a financial crisis makes it all the more difficult to get through. So please review your term insurance situation. I'm not talking about any fancy product. I'm talking about a simple cover. And obviously, it's time to make the dream come true. I know you wanted it, I wanted, we all wanted, we all want spare cash, right? So now's the time you really focus on it. The idea is to have at least 4 to 6 months worth of lifestyle expenses in your bank account as spare cash. I know it's going to be really difficult, to do that in our normal life. We aren't able to, but consider the fact that most avenues of spending have shut. Okay, on a lighter note, there are no restaurants where you can splurge. There are no movie theaters where you can splurge. So, might as well use it to your advantage and conserve that cash. The next point is only an extension of this. Cut back. Now's the time to be frugal. Okay, I'm not asking you to, behave really below standards or below your means, but I'm definitely asking you to be more economic and frugal in your spending habits. Movies, choose Netflix or Suryavansham, whatever you prefer. Dinner, have a comfortable home cooked meal. Trust me, it is not just good for your health, it is also good for your wealth. You do this. Loan, EMIs, credit card, etc. You should consider the RBI moratorium. For the uninitiated, let me give a brief about what the RBI moratorium is. The finance ministry and the RBI. So the RBI basically, announced that if you are having an outstanding, loan EMI or a credit card bill outstanding, you may choose to not pay it till the end of May 2020. That is a 3-month respite. The keyword here is moratorium. It is not equal to waiver. For the 3 months, your interest will continue to accrue. You will have to pay it come June, okay, along with the interest. So the idea is the amount that is unpaid during these 3 months, it will either be spread over the rest of the duration of your loan EMI. Let's say you have another 12 months of EMI to go. You don't pay for 3 months, so that amount will be divided over the next 8 months, or else your tenure will increase from 12 months to 15 months. In one way or the other, you will have to pay it. You will have to pay it with interest. But for those of you who are expecting some sort of liquidity around your cash flow situation, you can avail this facility that is offered by the central bank. Okay, you can make use of the RBI moratorium. Be very critical while using it. The people who can afford to pay it, please continue doing it. The people who are worried about their job security, etc., you can choose it, but obviously you do have the intention to and must understand that you have to repay it with interest. So this is like a high level job loss prep kit, and trust me, you do all these in a very good case scenario, in a very optimistic scenario, which I also hope you don't lose your job. You're not going to regret doing any of this. Take my word on that.
Thank you, Mr. Nirav. Thank you for that fabulous damage control prep kit. So we'll take the next concern. There are many who would have been investing in shares, mutual funds. Seeing their portfolio in red, what do you think is best way ahead for such investors? Is it a good idea to redeem now?
Okay. Obviously, my favorite piece. I keep dealing with this question almost on a daily basis, like 20 times a day. So I also had a couple of screens. So this is a compilation. I've just had this screens out of my back pocket. You'll see there's not too much work done on it, but trust me, this should answer your question around what should you do with your investments right now. Okay. So just a moment. Okay. So let me tell you something, guys. A lot happened yesterday. Okay. More is happening today. Even more will happen tomorrow. What should you do? If you notice, newspapers run a business, right? And why are they able to run it? Because there is some or the other news that is going to come in every day. Okay, and the same goes with print newspapers. But you got to realize that you need not react always. Okay, not acting upon something is also perhaps the highest form of action. I am a strong believer that if you don't take an action, that in itself is a very strong action. And something taken with a high level of consciousness. It is okay to not react. Okay, so there is this terminology in behavioral finance, called action bias, wherein people feel the compulsive urge to take an action when things move in an unpredictable fashion. Do not fall victim to action bias. It is okay to not react. In this segment, I'll be borrowing a lot of sketches by Carl Richards, one of my favorite authors, the guy who wrote Behavior Gap. I'll be borrowing a lot of sketches. You'll see that among the factors that drive returns, while we can go on with the list of technical jargons like the percentage in stocks, the percentage in value stocks, etc., so on and so forth, you will see the number one factor that drives returns is behavior. Okay, your behavior at this point in time, and you will realize that something, that small circle out of the box, you will realize market timing, stock picking, your brother-in-law, your friends, this has nothing to do with the returns that you are expecting on your portfolio. Okay, so behaving and reacting or not reacting in the right way makes all the difference. And Tarun, like you asked, for those wondering if they should cut their losses and withdraw, here's a very powerful sketch. Okay, this is a very wrong thing to do. Okay, this is a short way to go broke. If you have bought or invested at high levels, when markets were at high levels, and then you succumb to fear and you sell at very low levels, how do you ever expect to make money in the first place? Okay, do you know what's the number one rule to profitability, guys? The number one rule is buy low, sell high. Any business, investments, mom and pop store, any business, buy low, sell high. This number one rule to profitability. And if you are buying high and selling low, you're doing the exact opposite. And you know what the exact opposite of profitability is. Okay. So let me just take you ahead and not just leave you in the lurch by saying, what you're thinking is wrong, but also let me guide you in, what would be a better way to deal with this situation. If there is still something you want to do about your investments, you first got to take a look at this. Okay. Stay with me, guys. Don't get perturbed by the graph. It's a simple graph. This is Sensex. Okay. This is the stock market over the past 20 years. And this is every large pandemic that created a huge fear ripple in stock markets, right from SARS to avian flu to MERS to Ebola to Zika to now COVID-19. Okay, every time there was a pandemic, the markets dropped. Okay, I'm not saying that what's happening now is happening for the first time. Neither am I underestimating the severity of the situation today. But I'm saying that pandemics have been happening in the past. And if you were to just zoom in and only looking at how was the market during the pandemic, you will see only a decline. But as you move farther and take a view of the larger picture, you will see each time you would notice only an upward trajectory to be followed. This is important to understand. I want you guys to spend a second, okay, and understand about what is happening in the market today and what has happened in the past. The pandemics happened even back then. It is happening even right now. The world continued. Mankind continued to progress. See, guys, I always keep saying this one thing to my investors as well. There are only two things, okay? One, mankind will be able to overcome this pandemic. Two, mankind won't be able to overcome the situation. Two, if mankind won't be able to overcome the situation, then anyways, which, none of our money holds any value, okay? But if, and there is 100% probability, I am highly confident, okay, almost, and it has to happen that we will overcome this situation, guys. Once we overcome this, we are going to focus on trade, commerce, business. Your investment in companies which are going to flourish will also flourish in tandem. And this is what we had observed in the past, and this is what you should bear in mind today. We have enough learning lessons from history. Okay.
Yes.
So, for those of you who are saying, but what if it is an economic crisis? Okay, we will overcome this pandemic. Okay, we all are going to be healthier once again. But what about the economic damage? What if that doesn't recover? So, in a financial crisis, if that is what you're worried about, take a look at this. Okay. Dot-com bubble, 2006 market sell-off, the subprime crisis, global financial crisis of 08, the European debt crisis in December 11, the global market sell-off in February 16 triggered by China's slowdown, the pandemic today. You will observe after every steep correction, there was a huge recovery. Okay, these percentages that I'm saying, these are 3-year compounded average growth rates. So for those of you wondering what is the absolute, do a multiply by 3 for a rough estimate. For the dot-com bubble, if the recovery is 34%, in the next 3 years, you multiply it by 3, it is 100% absolute return over the next 3 years. Okay. For those of you who don't want to understand the CAGR thing, think of all of these recovery numbers as multiplied by 3. If you see that, the European debt crisis or the global market sell-off was at minus 20%, it led to 16%, which is, actually in 3 years absolute returns, it is almost a 50% return in the next 3 years. This is the steepness of the recovery path, guys, even in a financial crisis. We spoke about the pandemic situation. We spoke about the financial crisis. Okay. even every financial crisis was followed by a great recovery. You know what it is, you know what is right. Okay, deep down, you know now is a great time to buy. It is definitely a great time to buy. If you are worried that markets are low, in fact, that is a reason you should be happy. Each time दुकान में जब डिस्काउंट लगता है तब हम सभी को खुशी होता है, तब हम उसे सेल के नाम से कहलाता है उसे, and we all go out to shop, in bulk, just because some prices have been marked down. So these are high quality companies, the prices of which have been marked down just because of fear. Think of this as a seasonal sale. There is no reason that good quality companies won't continue to grow. For those of you who are worried about the volatility, okay, just take a look at this, okay, volatility versus no volatility. Always, with my word, guys, you will never regret it. Always pick volatility. Volatility is a sign of life. Even on the ECG, even on the stock markets, even in life, volatility is where lives, livelihood, and profits are made. If, let's say, if your salary, did not, let's say, if your earnings, your salary, your business income was not volatile, would you actually be able to earn as much as you are earning today? I don't really think so. We all have seen such volatility in life. We all have seen the ups and downs in our financial situation in life. But in the longer term, it has only put us at a place much higher. Okay. No volatility is no fun. There is no profit. If I say that, if as long as there is volatility in the markets, there is a chance that you can enter at a bottom and you can book profits at a peak. If there is no bottom and no peak, there is no profits being created. You got to understand that volatility is essential. Look at it as your friend, and understand one thing: investment returns and investor returns. The difference. Again, a beautiful sketch by Carl Richards. The difference between the two is your behavior gap. Your investment could have yielded much more returns, but the way you behaved determined how much returns you actually made. At this juncture, your financial situation depends more on how you behave more than anything else. Okay, so I feel this is a pretty smart way to look at things.
Mr. Nirav, that was fabulous. Actually, that's a huge moral boost that things are going to be okay, and people who are worried about their financial well-being, that last 5 minutes itself is a huge stress reliever.
Yeah, it's all about faith, yeah, Tarun. We gotta have faith and we gotta stick to fundamentals. Good quality companies will continue to persist. Businesses will continue to run. We'll continue to live.
Yes.
It's a temporary setback, but we all need to be in this together, hanging tight. Yeah, there are better days ahead.
Yes, and it's amazing that how it all boils down to behavior. So I would really like to put you on spot and ask you, like, you're saying that you have to you're saying that you have to face facts of what money you have. So is it a good place to start, Nirav? Just to look at the numbers and confront them head on what your economic reality is. If you owe money on credit or on a mortgage or a personal loan, it all comes down to prioritizing your money as it's limited. So what do you do in terms of making that sort of list to determine what falls into the category of non-essentials and what falls into the category of essentials?
Nice, interesting, yeah, Tarun. Like I generally keep saying to my friends and colleagues, you should always run a business like you would run your personal finance, and run your personal finance like you would run your business on a budget. Okay, so it all starts with a budget. I feel, most of us have been fortunate enough to have the luxury to spend without accounting for much, and I feel all of us can relate to this expression of shock and surprise when the credit card statement comes in. When did I splurge this much? All of us cribbing about the fact that why don't I have enough money in my account? I don't even party as much. Where is all the money going? So, I feel it all starts with having a budget and actually reviewing, every penny that you spend. This is a learning, that I've taken from my mom since my childhood. At home we maintain something that's called a chopdi or a hisab book. which every day whatever we spend we write it down, and at the end of the month we tally it with the accounts. So I feel that's a great habit to start with. Now is a situation where everyone should look at the kind of loans they are having outstanding. They should see the kind of salary that they are expecting in the month. They should start creating a contingency reserve, and they should start exploring of how can they improve their cash flow, either by availing the RBI moratorium that I spoke about, or by cutting down on expenses. When so you said one thing, how does one distinguish between essential and non-essential, right? uh, so let me help you guys. Okay, let me make it simple. Everything that the government is allowing today to be transported as essential is essential for you. Okay, food is essential. Everything that the government is not allowing today is non-essential, not just from the government standpoint, but even your standpoint. Luxury shopping, cars, watches, accessories, clothes, they are not being delivered. They are not essential. Grocery being delivered, it is essential. I feel that should be a great starting point without complicating and worrying about how do we prioritize. Just for a moment, believe in the fact that the government is giving you an indication what is essential and what is not.
Lovely, Mr. Nirav. So we have some questions from Twitter. Uh, we
Yep.
have some viewers who's asking questions. So one of the viewer asks that they're interested to buy house. They started looking for buying a house earlier to this pandemic and the lockdown. So what advice do you have to give them?
I'm sorry, could you just elaborate on it?
So what advice would you give for people trying to buy a new house?
That's a new house. Okay.
Yes.
Okay. So at the very outset, I was having this conversation even at home a couple of days back. Okay. We were having this conversation that, maybe the real estate prices are finally going to normalize. Okay. Loans are going to get cheaper, with the central bank cutting interest rates, etc. So maybe now could be a great time to buy a house. But it also brought me to a stark reality. How confident am I of my financial situation right now? Okay, so let's say I always keep giving this example. Just because you're a Ferrari that was earlier worth 50 crores is now available at 50% discount, that is 25 crores, and you can take a loan at 1% of interest rate, does not mean you buy it. Okay, unless you can afford it. So I feel more than it being a question of interest rate and uh, house prices, it is more a question of financial security and affordability. If you have that sort of financial security and foreseeable affordability, I think you can go ahead for it and capitalize on this situation, wherein
Yeah.
you might have a more bargaining power and you can benefit from lower interest rates. So this could work in your favor by all means. But you really got to understand. So I have one small thing. Okay, I just wanted to show it. It's a single slide. I'm so sorry, guys, but I'm sure the slide won't be very boring. Okay, I trust me, you'll like it. It is one of my favorites. Okay. So this is the inflation line, okay? The 10% inflation line. On ground, you face inflation, food, education, medical, rental bills, everything goes up by 10%. Real estate, gold, equities go above inflation line. Real estate, not so much these days because of the price markups in urban areas and the stocked up inventories, etc. But you got to understand and focus on the attributes of it. It is a large ticket size. It has very low liquidity. It has a certain holding cost of maintenance, etc. Okay, so while this was the slide I wanted to show you, I also wanted you to understand that real estate should be, while it is a good investment, you must not be colored by your past experiences that you might have had in the early 2000s, because the market is no longer that way. We all would have heard stories about our grandparents and our parents earning a lot in real estate and having multiple property investments, etc. But at the end of the day, it all boils down to demand, supply, and given the way the prices have been marked up, the increasing population, the lower affordability these days, the high propensity for people to spend than invest and save, all of this equates to a very pricey situation for real estate. And in most urban metropolitan areas also, if it is not affordable, the appreciation is also not going to be that fast. You must look into real estate primarily from a consumption perspective if you want to stay there. From an investment perspective, I feel you should also check out other avenues which offer you much more liquidity, which need not offer maintenance, like financial assets, for example. I feel that's a great way to look at it at this point in time for those looking out to buy a home.
Okay. Thank you, Nirav. Taking up the next question. So people predicting no income in coming months. Unfortunately, please advise for recent college passouts or freshers who have entered corporate recently and are bracing for their unfortunate times.
Yeah. So, pretty, unfortunate state. I have a lot of personal empathy for this phase of life. Tarun, you were there, I was there. We all know how it was, just to,
It's a
yeah,
shock. Suddenly, you study, work so hard, get out of
yeah,
college, looking forward to start working, and suddenly these freshers, they're facing difficulty in their financial stability. They have their loans behind them. How else can one address an additional income sources too?
right. As it is, finding a job was a nightmare. Okay, for freshers, always. I remember it was the same case with my seniors. It was the same case with me, and it is the same case with students today. India is a highly competitive ground. The world is a competitive ground today. But let me put it in a very simple way. Okay, guys who are just starting out with their careers, the ones who have not been able to score a job, or the ones who have just started with a job but are looking at an imminent layoff. Number one thing, guys, don't lose heart. Okay, the world needs us. The world needs you. The world is going to rely a lot on the younger generation. When I spoke about an economic recovery, I told that demographic dividend is going to be a key vector, and you are that demographic dividend. Be aware of that. Okay, so have faith. I feel you must utilize this time to upskill yourselves. You must try getting in touch with startups, etc. Try and accumulate as much work experience. See, in one way or the other, if you're not able to accumulate earnings or cash, you might as well accumulate skill set. So by the time the dust settles, you are at a very high level of employability and skill set fitment. Focus on these small little things. From an economic standpoint, the same rules apply. You might need to go a step ahead. Be proactive in reaching out to your banks in case you have an education loan. Renegotiate the interest rates if required. You know Avail the moratorium that is there for the next 3 months. If there is a specific scenario of non-foreseeability of you being able to repay that loan, be proactive and reach out to your bank. Okay, I'm pretty sure banks are understanding of the situation that is there today. Central banks are trying to support the citizens of India. Be proactive and tell them about the situation. Try and reach out to them, write to them. uh, don't make it a situation wherein they have to follow up or get back at you. Be proactive. See, at the end of the day, we all are honest guys. We intend to pay it back. It is a troublesome situation. It is neither your fault nor the economy's fault. It is an unfortunate event and situation, right? All of us can understand, but you need to take ownership of it. And at the same time, work on your skill set, guys. The storm will be away faster than you can think. Don't lose heart, guys. That's all I'll say. Don't lose heart. Keep at it.
Thank you, Mr. Nirav. Mr. Nirav, going on with the next concern, um, as agreed that emergency fund is the go-to prep scenario for this crisis. And looking over emergency funds on 4 months of span, 4 to 6 months. Uh,
Yeah, focus.
how would the situation um, be for the people who are close to retirement, who are getting close to retirement?
See, so for the people who are close to retirement, there is a piece of good news as well as a piece of bad news. Okay, the good news is you have already been planning for retirement. That is the presumption that since you are almost as close to retirement as it is, this does not come in as a shocker as much as it is to the people who are in the prime or the start of their careers. Okay, as it is, there was a foreseeable stoppage of income of some sort, and you would have created a cushion for it, so it is not as much as a shock for you. One bad thing is if you were actually planning to back on fixed deposits of banks, etc., and not just banks, any traditional investment products, or let's say any funds, any financial asset, the returns are not going to be as healthy as you would have expected it to be. Okay, so for the guys who are nearing retirement or have just stepped into retirement, you will have to perhaps cut back on your cash flow requirements. Okay, this is presuming that since you have already reached retirement, there was anyways which no salary or any other inflow as it is. Okay, so it was your retirement corpus that you were backing on. So if you were sort of taking a 10% withdrawal on your corpus, try and reduce it to 4% to 5%. I feel now is a good time to really focus only on the essentials, focus on medical needs, etc., more than anything else. I also feel that a large part of retirement cash flows go towards fulfilling life goals like travel, etc. We always have those grandpas and grandmoms who go in for a trip, Kedarnath or some religious place as soon as they hit retirement. So as it is, the lockdown is not going to let that happen, so that is some money saved there. Also, there are some other discretionary spendings that you would have thought that you would make in retirement. Just cut back on that a slight bit, on the donation parts, etc. Obviously, I'm not asking you to cut back on donations. I'm asking you to do it, help people in need, but be very conscious about what you're doing and try to optimize the cash outflow from your retirement corpus, because you want your corpus to last longer. You want to create a longer runway. So that would be my word to the guys who have just stepped into retirement.
All right. Mr. Rira, we'll take last three questions much before we call it a podcast. Moving on to the next question. How important is credit score right now?
So credit score has always been important. Okay, it continues to remain important today. But you would realize one thing, that credit score obviously plays an important role today as well. Whenever you try to avail credit, there is no going around that. But you got to understand that non-repayment of EMIs and credit card bills at this juncture, for when you have legitimately applied for the RBI moratorium, will not have an impact on your credit score. You need to recognize that fact, acknowledge that fact, that the government and the central bank has assured us that for anyone who has availed the moratorium, their credit score won't be affected. But let's say if you're trying to avail a new loan, a new credit facility, credit score continues to be as important as it anyways was even before this scenario.
Okay, thank you, Mr. Nirav. Taking up the next question. This question has two subparts. The first one is I have invested in a mutual funds. Every month, money is going from my bank account, and it is automatic withdrawal. What can I do about it? Should I continue or put a temporary stop? The first part of the question.
So we'll take it part by part, yeah, or I'll lose it. The automatic withdrawal that you're talking about is typically a systematic withdrawal plan. Okay, so the idea is you put in an amount X, and then you withdraw a certain percentage of X on a periodic frequency. It could be monthly or quarterly. Like I said a while back, for the retirees, it also applies to anyone who has a periodic withdrawal plan in place. You might have to reach out to your advisor, to your distributor, to the asset management company, and you should try to rationalize the withdrawal amount. That is, so let's say if you have been withdrawing 0.5% of your corpus every month, try and reduce it to 0.3%. Reduce the cash outflows, because you got to realize one thing, that your investments today will face a double whammy. Okay, one is the leakage through your withdrawals, and two is the reduction in value due to market volatility. Okay, so if you have more capital there in the corpus, it is significantly insulated against the volatility. Let me give you an example. Okay, let's say if you have 100 rupees invested, and let's say the market goes down by 10%, you will have 100 minus 10, that is 90 rupees left in your corpus. But let's say if you the same situation remains. Okay, the market goes down by 10%, your fund value goes down by 10%, and you also redeem or withdraw another let's say 20%, or let's say you redeem another 10%. So from 100 to 90, the 10 rupees is your 10% redemption. Your base value becomes 90, and now the market value of minus 10% is reflected on 90, which brings down the corpus to 90 minus 9 rupees, that is 81 rupees. Okay, so you are just further amplifying the effect of a decline in the value of your corpus. Do not do that at this juncture. Do not translate your notional losses into real losses by booking that amount and taking it out of the corpus. You got to realize every penny that you put in now, or let it remain in now, will be much more rewarding than it was before. Let me give you a simple example. When you invest 100 rupees and it falls down to a 50 rupees, you have lost minus 50%. Fair. But let's say when the market recovers from 50 rupees to 100 rupees, you have invested at that 50 rupee level, the amount goes up by 100%. Okay. So when it goes down from 100 to 50, it is minus 50%, but from 50 to 100 is a plus 100%. So it is the entire 50% that has increased. You got to realize this. So the idea is you really try to reduce the withdrawal quantum. Get in touch with your distributor, with your advisor, with the AMC, and try to get it to exactly the amount that you need to fulfill your needs for your needs and your essentials requirement.
Taking up the second part of the question, is my money with the banks insured and safe? Are there any limits around it?
Okay, very interesting. See, guys, let me highlight a very recent situation. Majorly around private and public sector banks. We all saw and read about a huge problematic situation in Yes Bank. Okay, just a couple of months back. What happened? It was rescued, right? It was revived. No depositor lost money. All the money is safe there. Okay. I feel, while, earlier the Banking Ombudsman Act insured your deposit to the tune of 1 lakh rupees. And, right now in the recent announcement by the Finance Ministry, they have increased the insurance limit to up to 5 lakh rupees of deposit. Okay, in case of any eventuality, your deposits are insured to the tune of 5 lakh rupees now as we speak. It is also a question of faith in good commercial banks. Okay, good commercial public sector and private sector banks. Banking is the backbone of the Indian economy. While technically, any bank, like any company, is vulnerable to any sort of eventuality. Okay, none of the banks are a God-given thing. But it is also a matter of faith more than technicality that your money is going to be safe in a good central bank, and finance ministry has also insured to the tune of 5 lakh rupees. In the wake of the crisis, they have increased the deposit insurance from 1 lakh to 5 lakh under the Banking Ombudsman Act. So this all adds up together and calls for some faith in the system. Nonetheless, even if you want to be safer, you might as well try to diversify your assets into, let's say several financial assets, financial instruments. Not just talking about mutual funds. It could be mutual funds. It could be provident funds. It could be bank savings account, bank fixed deposits into two different bank savings account. There are different ways you can spread your money. That should be a great way for those who are paranoid about money being safe. I feel this should give you a good sleep at night. This should help.
Thank you. And with that, we are heading towards the last question of the podcast. Mr. Nirav, the last question would be, what are the possible insurances that one should look into for risk mitigation during this crisis time?
See, insurance, the very word, says that you're insuring against a particular event or eventuality. Okay. I feel right now there is a very high degree of requirement for a need-based product. Okay. So, we do it at FISDM. We have it at FISDM. We are sure that many other, a simple Google search would, throw up various other, service providers offering the same thing. Something as simplistic as a, cover against the coronavirus or the COVID-19. These are small pocket-sized insurance products. Okay, it's just a couple of $100, and you get covered for amounts as high as 25,000, 50,000, 1 lakh, and as feasible as the amount being directly paid out into your bank account as soon as the patient is tested, the policy holder is tested positive. So these are small pocket-sized insurance products, which are a particularly no-brainer product at this point in time. It is highly need-based. I feel always at all junctures someone should have a basic hygiene, like a basic medical insurance cover that I spoke about. You should have a decent medical insurance cover. Medical expenses are pretty costly these days. While I gave the indicative, anyone earning between 0 to 5 lakhs annually should have a cover of at least 3 lakhs, and anyone earning more, a cover of 5 lakhs. This is purely indicative. Okay, it is not necessary that anyone earning less than 5 lakh cannot have a medical bill over 5 lakh. That is not the idea. The idea is around affordability. You must try and have as much coverage as you can afford to have in terms of medical insurance. Have it as comprehensive, cover your family as well. You must have a pure play term insurance at any given point in time. Okay, think of term insurance as an income substitution product. Do not get perturbed by the thought ki, what if I don't die? Okay, I don't get any money back. Be happy. Okay, this is some product where you don't want the money early. Okay, so this is a pure play insurance, and this is insuring against an unfortunate event, unforeseen event, and unforeseen being the keyword. Okay, unpredictable being the keyword. So have pure term life insurance. It is going to be of huge support, to your nominees, in case of an unfortunate event. And while there is no substitute to the emotional pain and emotional grief, I can definitely say that emotional plus financial stress is a tad bit too much for people to take. While no one has a solution for the emotional stress, at least you can relieve them of some financial stress that could follow in such case of an adverse eventuality. So look at these pocket products. Look at these hygiene products, like a standard medical insurance, a standard term insurance, etc. I feel you should be good to go, and anyone and everyone should at least have these basic insurance covers. I feel that's important.
Yes. Thank you, Mr. Nirav. Thank you for your valuable insights and the time you spend with us for explaining the viewers around how to take care of their financial situations in this crisis. And we really appreciate FISDM a lot for supporting the society during this kind of pandemic situations. Dear viewers, if anyone has any advisory or any support they're looking for in terms of making their financial decisions, please leave your email in the comments below. We would definitely make you guys reach to FISDM. And it's a marvelous job. Companies like FISDM are helping out the society at this right time, a simple decision making could change a lot in the society.
Right.
And I really look up to some of the valuable insights you have shared. India is safe. That India has a lot of dividend human resource. We young population is going to really recover it. And to finally close the podcast, what is that one advice? From my side, in the take of listening to the entire podcast, I think it's behavior. How one person is keeping his emergency fund, how is he smartly understanding his emotional, his economical status currently, and equipping himself for the crisis. From my side, it's behavior. What is the one point, Mr. Nirav, you want to convey to the viewers?
So I would sum it up as uh, stay kind, stay safe, and stay smart, guys. I mean, uh, do not panic. It's all about being strong in the heart, being strong in the head. Okay, having belief, and being knowledgeable, being smart. In fact, for any of you who want to reach out, there's a common ID, research at Fisdom. My Our team here will be glad to help you with any financial sort of guidance that you need. Obviously, Tarun and team is there to help you with every health related wellness that there is. We are there to help you with any wealth
I think
related.
it's a common problem that it's a common problem humanity is facing. That there is emotional stress, there's
Yeah.
financial well-being concern, and people are locked down. So there's physical activity requirement. So there are multiple. So I really appreciate each and every firm who's actually putting forth their all-in efforts to support this crisis and help as many people as possible.
Right, right. So stay strong, guys. Help each other out. We all need each other at this point in time. Like Modi ji said a couple of days back, "Jaan hai to jahan hai." Let's stay safe. We'll all tide over this and return stronger, guys. Let's just stay in the game. Let's hang in there. Better
Yes.
days ahead.
Better days ahead, viewers. With that said, that we would sum up the podcast and thank you for all the time and patience that you guys have put forth. I hope you guys take a better financial decisions and come out of this crisis strong. Thank you very much, everyone. Have a fantastic day.
Have a
Thank
great day,
you.
guys. Stay safe. Stay healthy. Yeah.
Thank you, Mr. Meera. Thank you.